Hey guys, what's going on? Jebb here, and in today's video we're going to be doing another installment of the Trading Strategies series. This is a series that we do here on the channel where we talk about different tools and indicators that technical analysts use to do technical analysis on cryptocurrency markets as well as on other markets like stock markets, precious metal markets, forex markets, etc. So if you're here from one of those domains, consider watching because this is going to be applicable there also. In today's video we're going to be talking about triangle patterns and we're going to be talking about wedges. Now what we're talking about in today's video does rely very heavily on the concepts that we discussed in the first two episodes of this series. So if you haven't watched them already, you can find them up here in the top right, and you can also find them in the playlist linked in the description. You're going to need to understand what we talked about in those videos so that we can build into what we're talking about in these videos. But before we get into that, guys, if you enjoyed today's video, definitely consider dropping a like and hitting that subscribe button. We do cryptocurrency videos every single day here on the channel. And also, if you're just getting into crypto or you're a veteran, I highly recommend signing up for the cryptocurrency exchange Binance. It's a great cryptocurrency exchange that I use for all my personal trading. So let's get right into it. Guys, as always, the first thing we have to do is define our terms. We're first going to be talking about triangle patterns, and then we're going to move into wedge patterns. We're going to be talking about triangle patterns first, so let's go ahead and define what one is. We're here on the Ethereum over US dollar chart, and if you guys aren't also, I highly recommend getting up some charting software and following along. I think you guys will get more value out of this if you follow along and you look for these patterns while you're watching and listening to this video. So the first thing that we want to talk about is this triangle pattern, so let's go ahead and define it. As we talked about in the last episode in this series, the trading with trend lines, a triangle pattern is essentially defined by a falling downtrend of resistance and a rising support trend, a rising uptrend of support. So as we can see here, we have a falling downtrend of resistance where Ethereum has gotten resistance on this line several times. We have our pivot point up here, we have our set point right here, we have another resistance point right here, and it looks like we may be about to break out of it as I'm recording this video. You guys go on Ethereum over USD, draw this chart and see if it broke out of this yet. This video is going up close to a week after I recorded it, so definitely go check if this actually played out. And then we also have our support level where we have our set point down here. You could kind of just call this one big set point, or you could call this one set point and then one pivot point and then one set point. You could basically call this entire area of a pivot point. Like I said, we talked about that in the last video. And then we also have some support right here. So what this is this is a symmetrical triangle pattern. It's symmetrical because both of the trend lines are going in opposite directions. If both of these trend lines were going in the same direction, this would be a wedge, but this is a triangle pattern because they're both going in opposite directions. See how if Ethereum was trading like this, then these would not be going in the same direction, so this would be either a trading channel or a wedge. But since these trend lines are going in opposite directions, this is a triangle pattern. And since both of these are going in opposite directions and they're both not pointing in the same direction, this is a symmetrical triangle pattern. So essentially what we have here, like I said, is a symmetrical triangle pattern. We're getting very tight in here. And the reason these are important is because when the price action of a cryptocurrency or whatever commodity, asset, whatever you're trading, is getting really close in here, eventually it's going to have to break one of these uptrends or downtrends. It's either going to have to break bullish or bearish. And within the next, let's see, we're here on the 19th. Both of these trend lines cross on the 28th. By the 28th, Ethereum is going to be forced to break either one of these support levels or resistance levels. It's probably going to break bullish because of the market sentiment currently. We'll see what happens though. But since it's going to get tight, never are you going to see a market just go flatline and just go sideways horizontally forever. It's going to break bullish or bearish. It's going to break one of these. It's not going to break both of them at the same time by doing that number. It's going to break one of them. It's more than likely going to break bullish here. But since this is symmetrical, you don't necessarily know. This is another thing we need to talk about. A symmetrical triangle pattern, which we're looking at here, you can call basically 50-50 about whether it's going to go bullish or bearish. Now, these kind of different patterns that we're looking at on charts, normally they do break in a certain way. We'll be talking about that in a second, but with symmetrical triangle patterns, when you're only looking at the triangle pattern, they can break either bullish or bearish about 50-50 because both of these trend lines are about the same degree from the horizontal line. So this one maybe is 30 degrees from a horizontal line down here. This one's maybe 50 or 60. So more than likely, it's a little bit more likely that it'll break bullish or break bearish, excuse me, but it can also very easily break bullish. Only looking at this pattern, you might say that 60% it'll break bearish, 40% it'll break bullish because this is sloping downward faster than this is sloping upward. The other thing that we have to talk about with consolidation patterns, which is what this is a consolidation pattern. The price action of the market is consolidating under these or inside of these trend lines. Another thing that we have to talk about is that this kind of triangle pattern, which is a consolidation pattern, is also a continuation pattern. So what a continuation pattern is basically this is a pattern that happens in an uptrend or a downtrend that signals that that uptrend or downtrend is going to continue in the direction that it's currently going. So the trend that preceded this trend, or the trend that preceded this formation, is a downtrend. Something like this. This isn't a downtrend in the same manner that we talked about last time, but the market is generally trading downward here. So since this pattern formed after a downtrend, you would expect it to break bearish because a symmetrical triangle pattern is a continuation pattern more often than not. It's not 100%. It's very possible this breaks bullish, and in fact, it probably will. Come back to the chart, well, right now when you're watching this video, because this video is going up a week later, and will have broken out of this. Ethereum might be up around $600, $700 by then. But this is normally a continuation pattern, so if you're only looking at this, you didn't know anything about the market sentiment, more than likely it would break bearish. So that is a triangle pattern, but what happens if one of these lines is horizontal? What happens if this level of resistance was like this? Well, that's not a wedge because it's not pointed up, and it's not a triangle necessarily because it's not pointed down. What is it? This would be considered an ascending triangle pattern. If our resistance level was flat like this, this would be considered an ascending triangle pattern, and actually, on Ethereum, we have a very good example of that, which is why we're doing this on the Ethereum chart. If we come back here in time on the Ethereum over US dollar chart, we see a great example of an ascending wedge pattern. This is a textbook ascending wedge pattern. What we have up here is a flat level of resistance here at $390, $380, wherever you want to call it, $400 flat. I'm calling it $390. Ethereum got resistance on this level twice and double topped. We talk about double tops in the first video of this series. I told you to be quiet, phone. We talk about double tops in the first episode of this series. That's essentially when a chart or when a market gets resistance at the same level twice. We got resistance at the same level over here twice on about $390. So that establishes our resistance level for the top of our ascending triangle pattern. And then we also have a ascending trend line of support down here, where Ethereum originally got resistance, or support, excuse me, down here around $150. We got support down here around $200. We kind of got support over here, and what you normally see with these is just like with the normal triangle pattern, these patterns, this is an ascending triangle pattern because it's moving upward, it's trending upward, the bottom is moving up. This is an ascending triangle pattern. These are normally continuation patterns as well, and that's essentially what this was. We were already in a bullish market, albeit a very small one. This was a very, very strange pattern. You normally don't see them necessarily this long term, but it did happen. And when you break bullish out of these normally will break bullish, and they normally are continuation patterns. When you break bullish out of these, you will normally see a very big movement, and we saw a very big movement. Ethereum moved from $400 to $1,400 within the span of a few months, which is a very big move. Now, speaking of how far a market will move, normally you can kind of determine how far the market is supposed to move with something that's called a price target. So for these triangle patterns, you can establish a price target. So what you would do to establish a price target, I normally don't use these, but this is what's taught, so I'm going to go ahead and tell you. I normally don't use these because the market, I don't think, relies on this as much as people think it does. But to establish a price target, what you would do is come back here to the first point where these trend lines are both over each other, so it'd be somewhere right around in here, and you would draw a vertical line, and then you would take that vertical line on the auto scale so basically we would see Ethereum in between about $120 and about $400. So you draw a line right here, you pull it over here, and then at the top of that line, that would be about where Ethereum would be expected to move to about a height like right here, up around $600, $650, $700. And we did actually see something like that. Ethereum did get resistance and trade around here. So this price target did kind of make sense. It wasn't a great price target, but it did actually work. If we were to do that on our symmetrical triangle pattern over here, then we would use this area right here, and then we could drag this out from wherever we break out, and we would expect Ethereum to go to about $950 after it breaks out of this. And conversely, if it breaks bearish out of this, we would expect it to go to about $100 by breaking bearish right around here, come down to $70 or $100. So that's why these aren't always that reliable, because it wouldn't make sense for Ethereum to go to $80. That just wouldn't make any sense. So guys, don't rely on these too much, but that is something that's commonly taught, so I'm going to go ahead and tell you about it. Another example of where we're seeing the inverse of this, which is a descending triangle pattern, is currently on the Bitcoin chart. There are two different ways that you can draw this. You can draw this as a wedge, which you can see right there, or we can draw this as a descending triangle pattern with a level of support somewhere around here. This is basically the inverse of what we just saw on the Ethereum chart, where we got resistance over here, big blow off top, and then we're in this triangle pattern. That's almost exactly the opposite of what we saw over here. But we are in this descending triangle pattern. It's either a descending triangle pattern or a falling wedge. We're going to talk about wedges in a second. But if this is a descending triangle pattern and this is a continuation pattern like we talked about, Bitcoin should be expected to break bearish out of this, as this is a descending triangle pattern. And also you can use a price target here. You could use a price target by drawing this out. Oops, let's get rid of that. By dragging this out, and then we would see that, oh, I stopped doing that. Then we would actually see that Bitcoin would be expected to fall to somewhere around $500. That's off the chart, but that would be around $500 down there. Or if we broke bullish out of it, then we would expect Bitcoin to move to around $14,000 with the price target. Like I said, I don't use those that often, but that is something to keep in mind if you guys are doing technical analysis. Technical analysis, even though, oops, that's RSI, sometimes it's not necessarily that useful, but sometimes technical analysis like that, that's not very commonly all that important, will become important. So keep that in mind. Now let's move on to wedges. We're going to be talking about a falling wedge here. Now let's keep in mind that triangle patterns, the three kind of triangle patterns that we talked about, symmetrical triangle patterns, descending and ascending triangle patterns, are continuation patterns. Now that we're talking about wedge patterns are reversal patterns. What a wedge pattern is when you have two trend lines that the market is moving in between that are actually converging. These 2 points are going to converge sometime soon, but they're both moving in the same direction. So as we can see here on Bitcoin, this downtrend and this downtrend, the downtrend of resistance and the downtrend of support, are moving in the same direction. Bitcoin is trading in between them. This is a falling wedge. It's not a trading channel because these two lines are not parallel. If they're parallel like that, that would be a trading channel, but they're not. So this is a falling wedge. It's falling because the market is actually moving down. It would be a rising or an ascending wedge if it was moving up. Currently, it's a descending wedge or a falling wedge. Something to keep in mind with wedges that I hinted at just a second ago is that instead of being continuation patterns like how triangle patterns are, these are actually reversal patterns. So what a reversal pattern means is that whatever trend was moving into this formation before it formed, you would expect this trend to break out and see a reversal. So since we were already moving down, and now that we're in this pattern, you would expect a reversal breakout. That's just a statistical thing. Normally, charts that are in a wedge will break in the opposite direction of whatever direction they were moving when they formed into the wedge. So since we were already going down, you would expect to break bullish out of this. Now, if you were paying attention, you will have noticed that there's a contradiction here, because this pattern, if you draw it as a descending triangle pattern, you would expect a bearish breakout because this is a continuation pattern. But if you draw it as a wedge, this is a reversal pattern and we would expect a bullish breakout. So this is where these kind of things can overlap, and you really just have to use your own judgment and use your own opinions on what's going on in the market so that you can really determine what you believe is going to happen in the market. I believe Bitcoin's going to break bullish out of this. A lot of people do, but some people are also expecting Bitcoin to break bearish out of this. These patterns are not the only thing that you need when you're doing technical analysis. You need to have a good fundamental understanding of the market as well to see where they're going. Technical analysis is most useful when external forces like news and other things that you can't see on the trading charts are not affecting the price action. When Bitcoin's just silent, there's no real big news. When a chart's silent, there's no real big news. That's when TA really shines. An example would be right now when I'm recording this. But as we were talking about with trading with price targets, and we could also do a price target with this. We could draw this line and then pull it up here from wherever we break out of this downtrend and expect Bitcoin to go to around $14,000, or if we broke bearish, to go to around $500. You wouldn't really expect it to go to $500. That wouldn't make a lot of sense, which is why I don't recommend always using these things. Nothing is set in stone, guys. These are just general patterns that you can see being used. Now, I did say that I was going to show you some examples of where these patterns are very, very powerful. If we come in here to the 1 hour chart, you might have already seen them. Just yesterday from when I'm recording this, I accidentally called perfectly a breakout from a consolidation triangle pattern, and that's exactly what we saw here. You can watch that video up here if you're interested. It's about a week old now, but this is what the chart looks like as I'm recording this. Like I said, this video is being recorded on a Tuesday. This is going up on a Monday, the next Monday, so this is recorded 6 days before it's going up. But what we saw here is Bitcoin came into a consolidation pattern, a triangle pattern, a symmetrical triangle pattern, like we saw on Ethereum. This is the same kind of pattern. And Bitcoin broke very bullish out of this. It got very, very tight in here and broke very, very bullish. So you can normally tell when these are going to break bullish when they get very tight. If you guys want to trade patterns like this, I should have mentioned this earlier. If you guys are going to trade patterns like this, what you want to do is have volume up. And then whenever the asset or whatever you're trading breaks one of these trend lines, wait for a big volume candle. As we can see down here, we saw a very big volume candle. Wait for a big volume candle, then buy in somewhere around like right here, because then you would expect it to move up quite a bit. Let's use our Let's use our price target to see how accurate that was here. Our price target would be drawn right around here. If we bring this over, we would expect Bitcoin to go up to about $7,000. We only went up to about $6,700, which is an example of where these aren't always that precise. Now, we might see this happen in the next couple of days. It might have happened by the time you see this video, but this was predicting about a $7,000 move. We didn't see just quite that. We ran up to about 68.50, which is pretty close. But there's another thing that we want to talk about before we wrap up. With consolidation patterns and with wedge patterns, when these patterns get very, very tight, as you can see, Bitcoin got very, very, very close here. There's just a few hours left before it absolutely had to break out. When they get very, very tight here, the math about the statistics about which direction these kind of charts are likely to break kind of breaks down. So these charts can either break bullish or bearish. There's a lot of randomness when you get very, very tight in here. Like as you get closer and closer to this apex right here where the two charts meet, a lot of randomness comes into the market because one or two whales just buying up or selling a lot of Bitcoin or whatever commodity or asset or whatever can move the market enough to break one of these downtrends just by accident. So be very careful trading these. Do not buy these. Do not trade this before it actually breaks out. Wait for this to break bullish or wait for it to break bearish and then make your trade. But guys, that's going to do it for this video. I hope I gave you enough. And I think I gave you enough information, enough advice, not advice, but enough information, that's a good word, so that you guys can continue to do your own technical analysis and continue to figure out how to use charts, continue to learn cryptocurrency, learn technical analysis, learn everything, so that you guys can make some money on your own and you don't just have to listen to YouTubers. I want you guys to critique me. I want you guys to critique other YouTubers. If I make a mistake, tell me. I love constructive criticism. Constructive is the key word, though. Another example of where a consolidation pattern, a symmetrical triangle pattern worked very well is right here. Back over here in early April, we broke very bullish out of this. So these are powerful. These are very powerful patterns. I've talked about them a lot in my other videos, and they are very powerful patterns. So if you guys understand these, you will go very, very far in technical analysis. Continue watching this series, and I hope you guys will get a lot of value out of it. If you haven't already, go ahead and drop a like and hit that subscribe button. We make cryptocurrency videos every single day here on the channel. You can watch some of them up here in the top right. Also, if you guys are interested, go ahead and follow me on Instagram and Twitter at CryptoJebb on both platforms. I think you guys will be glad that you did. If you are not already signed up for a cryptocurrency exchange, whether you're a new or you're an absolute veteran, I highly recommend Binance. Is my favorite cryptocurrency exchange. If you use their native Binance token, you will get 50% off your trading fees, which is pretty nice because trading fees can add up if they can add up if you're trading a significant portion, if you're trading a significant amount of value. But that's going to do it for this video, guys. I want to thank each and every single one of you for watching, and I will see you guys in the next video. Peace.